The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
U.S. stocks appear to have gotten their mojo back. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Katie Greifeld. We're kicking off to the closing bell here in the U.S. Just one day to go until Thanksgiving, Romaine, and stocks are rallying. The S&P 500 higher by about 0.8%. Big tech punching above its weight, up about 1% right now. But once again, for at least the second day, the Russell 2000 is your outperformer on this Wednesday, Thanksgiving Eve. The small caps up about 1.3%. I wanted to highlight Bitcoin too, Romaine, because we actually saw a big rally here, a big burst of enthusiasm a little bit earlier in the day. We're still below $90,000 a coin, but we're getting very, very close.
Yeah, risk sentiment has certainly shifted over the last couple of sessions, and here on the penultimate trading session of November, the S&P is poised for a fourth straight day of gains. The gains are broad, and a retest of key technical support levels that was successful. Welcome signs of renewed upside momentum for the benchmark index, which, remember, less than a week ago was nursing a more than 4% month-to-date decline. The last 4 days have now put the S&P back near break-even for the month, with nothing left but a holiday-shortened half-day trading session on Friday. See you then, Katie. Now, some of the moves higher, particularly in small cap, mid-cap, and cyclical stocks, they are undoubtedly correlated to renewed bets on Fed rate cuts. Remember, 5 weeks ago, traders had priced in a 99% chance of a cut next month. Those odds plunged to less than 40% last week, following a string of hawkish Fed commentary. But the release of delayed government data that showed softness in the labor market, well, that is now emboldening some of the bets out there here and giving the idea here that those rate cut bets are now back up to 90%.
High conviction here that they go ahead in December. I thought the whole hawkish narrative from the Fed a week or two ago was a little bit silly, given the situation that we're witnessing in the labor market figures.
Meanwhile, you got the bullish bets out there for 2026 rolling in already. JP Morgan strategists see the S&P rallying at least 11% by the end of next year to 7,500, and say that if the Fed eases policy more than expected, 8,000 could actually be in the cards. Deutsche Bank's Pinky Chada also sees 8,000 in play amid strong earnings, Katie, and share buybacks that he says will rise in line with profits.
It's going to be interesting to see what role big tech has in that potential forecast, and many others on Wall Street. And I want to talk a little bit more about the dispersion in the AI trade that we've been talking about a lot this week. Take a look at the chart behind me. In blue, you have NVIDIA's performance, and then in white, this is the Bloomberg Magnificent 7 index. If there's one winner in November, it's Alphabet, of course, and to the downside has been NVIDIA. So really zoom in on that part of the chart. That's the one that's interesting. The fact that you're starting to see the lines break apart, even though NVIDIA has had a really rough November, you are seeing the Magnificent 7 as a whole help by Alphabet starting to break away. So you don't just need NVIDIA here, Romaine. This is a team sport, after all, when it comes to the market.
I love that. There is no I in team, Katie Greifeld. Jason Pride joins us right now. He's got I in his name. Chief of Investment Strategy and Research over at Glenmede. Jason, great to have you here. I mean, what do you think's gotten into the market over the past few days? Is this about rate cuts? Is it about strong earnings? What?
I think to some degree it's about rate cuts, but it's also about a lot of people starting to turn their attention and look ahead to 2026. One of the things that we think we're going to be dealing with as we begin the year is we're going to see a surge in economic activity from multiple different avenues. Number one is going to be the magnitude of fiscal spending, fiscal stimulus that comes in from the One Big Beautiful Bill, both for consumers and for businesses starting off next year. We're also going to be dealing with lower rates. Put those two together on top of an already decent earnings picture for the market already, and you have some reason for optimism as we start the year. And it's an optimism that broadens out. It's not just about AI. It's not just about technology. It's about all portions of the economy as that fiscal stimulus is shared across the board.
Well, that's where I want to go, because, I mean, we talk about the positioning that most folks had for a good portion of the year, which was relatively narrow and for a reason. Are you seeing true evidence of folks really starting to broaden out their portfolios in a way that is beyond the Mag 7 and the other big cap tech stocks that took us here?
Now, we don't necessarily have a great look into everybody else's portfolios, but what we think that we're seeing based on street commentary, they're coming around to this view that this is a more robust and broadening out economic cycle. And as we see other portions of the market participating, mid cap and small cap in particular, the rest of the S&P 500, not just the Magnificent Seven, we think that is evidence of the market rotating into those names and recognizing that upside. Now, fundamentally underpinning that is something that's really important, and that is that we're seeing smaller company earnings starting to outpace and rebound from levels that we saw just a year ago. That provides a more kind of broad outlook and maybe even a more robust outlook for those companies that are down spectrum for investors.
Well, let's talk a little bit more about those small companies, because I know, looking at your notes, that you favor U.S. small caps here, and you're not alone in that, Jason, but it feels like we've seen so many false dawns. So beyond corporate earnings, of course, those earnings picking up when it comes to the smaller companies, how much of it depends on the Fed actually delivering when it comes to rate cuts next year?
I think the Fed delivering on some of the rate cuts is actually part of the story. When you look at balance sheets for small cap companies, they are larger utilizers of debt, number one. Number two, they do more of their debt in kind of floating rate structure or things that are shorter term in nature. So their debt will reprice faster than larger capitalization companies' debt. But that is not the only story. Small cap companies are also one of the biggest beneficiaries of the upcoming impact of the One Big Beautiful Bill. They're likely going to see their tax rate, which is higher in aggregate relative to large cap companies, decrease faster or at a more significant pace than large cap companies. So you're going to have both of those things occurring side by side. And then if we do have a round of infrastructure spending pickup, capital spending by all businesses, we think smaller cap companies are more likely to benefit because they tend to be ones that participate on the revenue side of that capital spending if that picks up into next year, which we think is something that's going to be a big part of the story in 2026.
And just to check the score, you take a look at the Russell 2000 year to date, higher by more than 13% on a total return basis. You compare that to the big guys in the S&P 500, that index higher by about 17.4%. Jason, would you expect those two positions to be flipped in 2026, or is this more small caps catching up?
I think this is going to be a lot about small caps catching up in 2026. They had a really good window before post-COVID. They had a back-off period after that as larger cap and tech kind of caught a very big wave. And now as we're broadening out again, we think small cap is kind of catching up to the trend. They can participate in long-term markets. In fact, small cap historically, because of its ability to grow faster typically in more typical environments, has actually tended to outperform larger cap stocks. And we think they'll be trying to reassert that position longer term in 2026.
All right, Jason, always appreciate it. Jason Pride, have a wonderful Thanksgiving. Chief of Investment Strategy and Research over at Glenmede, kicking us off to the close here on this Wednesday afternoon, just ahead of the Thanksgiving Day holiday on Thursday and Black Friday. Well, on Friday, the National Retail Federation's Mark Mathews will be joining us in just a second to check the pulse of the American shopper as retailers get ready to roll out all of their holiday deals.
Plus, Jefferies Sheila Kahyaoglu jets us into aerospace and defense, breaking down what's soaring and what's stalling and where the sector needs a little more runway as holiday travel gets underway.
And we stay cruising with the travel sector. Sara Nelson of the Association of Flight Attendants is going to be joining us as well to talk about what she expects on one of the busiest travel weekends of the year. All that and more coming up in just a bit. Stick with us. This is The Close on Bloomberg. Some breaking news out of Washington, D.C. President Donald Trump has been briefed on a tragic situation where we've learned that 2 National Guard members were apparently shot. Now, this is a relatively new situation and one, of course, where we don't have a lot of details, but we do want to go to our Balance of Power co-host, Joe Mathieu, who is down in Washington, D.C., for a little color on what we know. Joe, give us a sense here, not only what we know, but where exactly this happened and who was involved.
You know, it's interesting because D.C. is kind of the opposite of New York when it comes to Thanksgiving, Romaine. This city empties out. It's a ghost town right now. The president's at Mar-a-Lago, lawmakers are gone. And it's kind of like a Sunday when you drive around on this day before Thanksgiving. So to see this break out in the middle of the day was quite shocking for those who were literally a block from the White House. This happened at 17th and I Streets. If you're with us on Bloomberg TV, you can see the intersection right near Farragut Square, if you know where that is, just a couple of blocks away from the actual entrance of the White House. Now, this is something that's just unfolding. We can tell you that an arrest has been made. There were concerns about a shooter at large here. To your point, Romaine, the president has been briefed on this, but he's not in the White House. And J.D. Vance, the vice president, who, of course, lives up at the Naval Observatory, is in Kentucky today. Maybe he'll add a little bit more to this when he speaks a bit later on. But this is something that might involve Homeland Security as well. We saw Kristi Noem on Twitter a short time ago saying that she has been briefed on this and they're working with local law enforcement. We can actually look right out the window here, Romaine. It took place only a couple of blocks from our Washington, D.C. bureau, and they're closing streets down. There are a lot of police and emergency vehicles spread out around the neighborhood.
Well, Joe, as you say, this is a fluid situation, so there's a lot we don't know right now. But talk to us about the fact that the National Guard was deployed at all, because that in and of itself is a bit of an unusual situation.
Well, that's true, and it was a very controversial one when President Trump decided to deploy National Guard troops to help fight crime, was what he said at the time, not unlike what we have seen in some other cities here. But their deployment, which began in August, was recently ruled illegal by a federal judge. They're still walking the streets here because they're allowed to be deployed pending appeal. But no, this is not something that we're used to seeing. When we walk to work in the morning, we see sometimes large groups of National Guard troops walking around. They've been doing everything from cleaning up parks to helping support immigration authorities in town. And to see this happen the day before Thanksgiving, knowing that they're away from their families in many cases, really is a tragic situation today.
Joe, I know we're still waiting to hear from the president, and you also mentioned Vice President J.D. Vance, who's in Kentucky, the president himself down in Florida. Have we heard from any other officials, either from the White House or Congress, in response to this shooting?
Just as I mentioned, the Department of Homeland Security and Secretary Noem was pretty quick to respond here. We haven't heard much else other than Press Secretary Caroline Leavitt, and that is a single line. As she said, the White House is aware and actively monitoring this tragic situation. I'm sure they'll be updating the president as we learn more here. But this just happened a very short time ago. And as I mentioned, when J.D. Vance speaks, usually at a moment like this, he's in Kentucky to speak to troops, as a matter of fact, around Thanksgiving. Sometimes they'll give us a status update, so we'll let you know.
Hey, just real quickly, Joe, I mean, you mentioned the location of this. And for people that aren't familiar, I mean, this is near the White House. It's in a downtown district, a lot of office buildings. Violent crime on that particular block, that particular square, is incredibly rare, as having lived in D.C. for years here. Were there a lot of people out on the street at the time that this happened?
That's I guess the point I was trying to make a bit earlier, is that there are so few people downtown today. You don't have that lunch crowd out there, Romaine, because so many offices are empty. So maybe we'll consider that a good thing, that Farragut Park there that you can see in our shot on Bloomberg TV was largely empty, because normally you've got a big area where buses drop people off there to get onto the metro, and you can have, hundreds of people lining that sidewalk on another day. So maybe we'll call that a win so far. But you can see the crime tape is up. National Guard troops and police are out.
All right, Joe, really appreciate your reporting. You're going to have much more at 5 p.m. Eastern on Bloomberg's Balance of Power. Of course, we'll continue to follow that on The Close as well. That is Joe Mathieu, the co-host of Balance of Power. This is The Close on Bloomberg.
Time now for our top calls, the big movers on the back of analyst recommendations. And let's start today with Autodesk. Deutsche Bank upgrading to buy after the software company's earnings, calling the quarterly report one of Autodesk's cleanest in years. Those shares up for a second straight day. Next in line, let's take a look at Zscaler. JP Morgan modestly adjusting its price target to 354 from 351, maintaining an overweight rating on the cybersecurity play despite a revenue forecast that disappointed quite a few investors. The analyst says the company's annual recurring revenues for emerging products still, in his view, stood out as exceptional. The shares, though, having their worst day since September of 2024. And finally, Old Dominion, Rothschild Redburn initiating coverage of the freight operator as a new sell, $114 price target implying a 16% decline from current levels. With the analyst saying the trucking company will see diminishing marginal returns from additional investment, partly due to its network service levels and margin profile being closer to maturity. Nevertheless, those shares up for a second straight day. And those are some of our top calls. We do want to say in the, well, I guess travel, transportation space, if you will, and talk a little bit about airlines. About 31 million passengers are expected to travel on one of the busiest stretches of the year for this Thanksgiving holiday. This is according to industry group Airlines of America. Now, this is going to be the first big test here of our air travel system since all of the disruptions from the government shutdown last month. Joining us right now to talk a little bit more about this is Sheila Kahyaoglu, Managing Director in Equity Research at Jefferies, covering aerospace, defense, and airlines. Sheila, great to see you, by the way.
Thank you.
I mean, this is like your time to shine because everyone's so focused on this. And as someone who spent the month of October traveling, unfortunately, all those disruptions, is that over with? Are we people traveling this weekend? It's smooth skies, or as smooth as they can be?
Shutdown and snow didn't have me on a single delay, I will tell you. But that might be because I know how to choose the routes I'm on and the airlines that I fly.
I know, call me next time.
So I was pretty good, and that's why I'm here, because I'm actually not traveling for Thanksgiving. It's the day I'm grounded. I think one of the things from TSA expectations is we're only expecting 1% growth in air traffic for this Thanksgiving weekend versus 2024. Oh, wow. Those are actually pretty subdued numbers. And we have Delta out saying, Ed Bastian, the CEO of Delta, talking about a 5 to 10% reduction in bookings from initial expectations, just given the shutdown. People were sort of hesitant to book, but so we're actually seeing a little bit of a slowdown, and sell side will probably have to adjust their Q4 numbers given the shutdown and the impact it had.
Is that directly tied to the shutdown, or was this kind of bubbling up underneath the surface prior to that?
I think folks were sort of hesitant, even in my travels. I was always allowing myself an extra hour or two when booking my travel for December because I wasn't sure when the shutdown would end. So I think people were hesitant to book their Thanksgiving trip. So we're not actually, although the numbers are reaching all-time highs, year-over-year growth is pretty subdued overall.
So it's interesting to hear those comments from Ed Bastian, and I know that Delta is one of the airlines that you do have a buy rating on. Do you think that, you know, if you were able to sit in front of the executives of all the other airlines, that they would say something similar, or is that more unique to Delta?
I think we'll see it across the board, to be honest. Delta's seeing it primarily in Atlanta. They've reduced capacity there, but we'll see the trend across all the carriers. It's not exclusive to Delta.
And Sheila, I wanted to get your thoughts on, you know, a broader look at the airline industry right now, because we have a great story on the terminal right now about Americans bracing for the Thanksgiving rush. And it just feels like, especially in the last couple of years, flying has become such an unpleasant experience. It's more of a necessity versus, you know, something that's viewed as a pleasurable part of the trip, that if you can avoid flying, you try to do that. And I wonder, you know, broadly, existentially speaking, whether you view that as a longer term risk.
Yeah, we've seen airlines cut capacity tremendously for profitability. So they've cut those regional routes. They've cut frequency to major airports. So overall, we're seeing capacity grow 3%, even less than that domestically, just because airlines want to be more profitable. The low-cost carriers continue to put capacity in Florida and the Caribbean, and that's where we see price discounting. But on the premium side, I think one of the themes for 2026 we're going to watch more carefully, and this is something we're doing more work on, out of the major network carriers, United, Delta, and American, who's going to win that premium race? So who's adding the most wide-body seats? Who's adding the most premium seats, and how's that going to impact profitability, and who has the bigger leg up?
That's what I'm interested in, the sort of experience of flying and, you know, how travelers actually get from point A to point B, whether or not it makes sense for airlines to invest in making that experience more pleasurable, even beyond the front of the cabin, you know, extending into economy as well.
Yeah, I think, you know, Delta is a good example. Delta invested $3 billion starting in 2019 in JFK in the buildup of their Delta One terminal, their lounge, and it's part of the entire experience. You get through security in your own private line, so that means you don't need the extra 30 minutes that you have to brace for maybe with Polaris. So airlines are starting, even beginning at the airport, the premium experience. I think in the back of the cabin, in the economy cabin, the delineation of main cabin, premium plus, all the different, they're pretty much the same. Yeah. I think what you're working on with airlines for consumer experience is on time and efficient aircraft. So who has the newest aircraft, who has the best cabin experience, even in economy. And that's why Southwest has completely changed its experience. They're charging for bags now. They're putting in-flight entertainment. They're putting plugs in. So they realize they need to keep up.
Well, I'm curious how far you can go with this premium experience. I mean, I know what Bastian's talking about is maybe a little bit different than what Southwest and some of the others are trying to do, sort of the real premium versus economy premium. But is there a limit to how far they can take that?
I think they're continue to expand the envelope, and United will have some new business class seats where they'll have a suite. They haven't fully announced it yet. And I think one of the other things with premium is also opening up new routes that'll make it easier to go direct to destinations. That doesn't necessarily have to be with a wide body aircraft. United opened up 5 new routes for summer 2026 with 737 MAXs. So they'll be going to parts of Spain, San Sebastian, Croatia, Split, and Edinburgh. Easy to get to destinations without connecting. That might open up a new market.
And they've dealt with, or the major airlines, they've dealt with all the labor issues that we were talking about earlier this year. That's kind of behind them for now?
With the exception of Air Canada, pretty much all the major U.S. carriers have gone through that. And even, Boeing and the manufacturers are getting through their union negotiations. So that's all out of the way. But as we think about revenue growth for the airlines, pricing is still deflationary or flat. So you're really banking on the premium. Your revenue growth capacity is only growing 3%. So if your cost inflation is 4 to 5, you really need that premium to come in. And we've seen like a 10-point gap in premium versus main cabin. So that's why every time I'm on, I continue to harp on how important premium is. Because without that, airlines are not very profitable.
And tell them to work on the service too. I mean, it's one thing to charge a premium, but people got to be
nice. What do you require with the service? A smile,
white gloves, silver tray, that sort of thing.
Can I wear my pajamas on board? How about that?
Some airlines give you free pajamas.
I know, nice pajamas.
All right, Sheila, great to get some time with you.
It's a golden age, Katie.
A golden age, that's according to, of course, our Transportation Secretary. Sheila, have a wonderful Thanksgiving. That is Sheila Kahyaoglu. She is Managing Director in Equity Research over at Jefferies, covering aerospace, defense, and airlines. Neither of us are traveling for Thanksgiving.
No, thank goodness.
I am traveling in the first week of December, so I'm interested if my December experience is better than your October one.
I hope it can be. It can only go up based on what I experience that day.
Well, fingers crossed. Coming up, Thanksgiving weekend will draw a record number of shoppers, according to the National Retail Federation. We'll discuss the impact on retail and holiday spending with NRF's chief economist, Mark Mathews. Straight ahead. This is The Close on Bloomberg.
.30 p.m. here in New York. This is the countdown to The Close. I'm Romaine Bostick.
And I'm Katie Greifeld, of course. Counting down to the close, we're very focused on markets.
Thanksgiving.
But we're very focused on Thanksgiving, Romaine.
I do.
To your point.
I like to eat.
I know.
And Thanksgiving, that's a big day for people who like to eat.
Yeah, it's sort of the centerpiece of the day.
It's like you can be a glutton and no one actually judges you.
No one judges. It's fine.
So.
Snake meal. You eat your whole meal at once. You don't eat anything else throughout the day. Anyway, let's talk about Black Friday because we've been following shopping and the trends there very closely.
I learned so much about you. Ouroboros.
Ouroboros. Yeah, snakes come up a lot on this program. But anyway, it's interesting that you take a look about some of the trends that we're starting to see, some of the figures that are coming out. There are people taking advantages of these promotions that we're seeing, but not necessarily for presents.
Yeah, this was a great story that I read this morning. And talk about people looking at all these discounts, and I'll just use it to stock up on basically the things I would normally buy all year long. So whether it's pet food and household items, sheets and toiletries and things like that. So people are taking advantage of Black Friday sales, but not to gift to anybody else, apparently.
Yeah, that's the thing. You take a look at Amazon Prime sale data from this summer, and apparently it was household items like dish soap and dishwasher rinse aid that were among the best sellers. So that certainly tells you something. We also had fresh data out of the National Retail Federation estimating a record Thanksgiving shopping weekend ahead, fueling the more than $1 billion in holiday sales expected for 2025. Joining us now to cut through the cross currents is the National Retail Federation's chief economist, Mark Mathews. So we're calling it holiday spending, Mark, but that might only refer really to the time period that the shopping is placed in. I wonder what you're seeing when it comes to what people are actually spending their dollars on.
Yeah, so we're expecting a really strong showing this weekend. 187 million people, which is a record number, saying they're coming out, and 130 million on Black Friday alone. So this is, really a confirmation that the bright spot in the economy right now is the consumer, and they are spending. And like you said, they're spending on many different things. They're not just spending on holiday items. When we look back to summer, we know the consumer is very, very into sales right now. We call it very promotional. And we've seen that anytime there have been sales, consumers have jumped in and bought everything, not just the things that they need, like back to school. They weren't just buying back to school items; they're buying everything, and that's why we feel like going into this this holiday weekend, people are going to be shopping. Consumers have told us that 60% of them are more interested in sales and more driven by sales this year than they were last year.
Yeah, that's what I'm interested in, how this period compares to periods prior, because people always like sales. People like to feel like they're getting a deal. But Mark, give us a little bit more detail about that comparison.
Yeah, so what we do know is that if you think back to when we're in the pandemic period, we had a lot of people who were very concerned about the economy, and we see the same thing. We see very, very low sentiment right now, and that's manifesting itself not in a reduction in total spend. It's manifesting itself in that consumers are changing the way they're spending. They're trying to stretch their dollar. They're being more careful, and they're being a lot more focused on sales and focused on opportunities to, get the best deal. So right now, that's the consumer psyche. And we also know that, there are different economies out there, right? Higher incomes are spending a lot more. They're unaffected, but we do see lower incomes struggling a little bit more. But one thing that we have seen throughout the course of the year is that when it comes to spending on family and loved ones, the consumers have stepped up. Mother's Day, Father's Day, back to school, Valentine's Day, all of those events were at or near records for spending this year.
And we should point out, Mark, I mean, you guys are basically tracking like real actual payment data, if you will, or basically card swipes and things like that. So you have a much better read into exactly what people are buying. I am curious, do you ever read into what day those people are buying? I know we make such a big deal about Black Friday itself, but I feel like I've been getting promotions for the last few weeks. I actually bought a suit a couple weeks ago, 30% off, not bad. But I am curious, I mean, is it still like traditionally that is the biggest day, or do you see that maybe days further out into December end up maybe getting a little bit more action?
Yeah, it's such a great question because we've seen this change, right? You'd think back to 15 years ago, Black Friday was about Black Friday that particular day and being in store. And now we've seen the impact spread out. So it's not just Black Friday, it's the Saturday, it's the Sunday, it's Cyber Monday as well. So consumers are spreading their dollars, but they're also shopping earlier. So we see a lot of consumers saying that they're shopping year round. The one thing that we have seen, though, is that it used to be that consumers would expect that all the good deals would be on Black Friday, and that was it. That was their one chance. We see that consumers now recognize that that may not be their last chance, that, you're going to see some great deals on Black Friday, but you might well see deals throughout the rest of the year. So we do have some procrastinators out there like myself who might still get lucky, December 24th.
I love it. Of course, you're the procrastinator. Was it always say like it's like the mechanic always has the worst car and the shoemaker
has
the hole in his shoes. But on that point, Mark, in all seriousness, I am curious too, just about just sort of other trends too. I mean, I've seen some reports out by the National Retail Federation how you're seeing an uptick in people doing thrift or secondhand types of gifts rather than buying something new. And I don't know if that's a cost issue or just maybe people being eco-conscious or whatever. Is that like a real thing?
It is a real thing. Yeah. We've seen that number tick up consistently year over year. And I think you're right. It's a number of different things. It is a cost issue, but there is also a sense that, we like the vintage thing more. We love the thrill of the hunt. When people talk about, the internet killing the store, it hasn't happened, and it's not going to happen because people enjoy shopping. They enjoy going into the stores and looking for items. But I would say that when we ask consumers what they wanted most for the holidays, the thing that came top of the list was cards, right? So people want gift cards, and I guess that's because no one knows what you want like you do yourself.
So zooming out, I mean, aside from just the holiday shopping period, we're talking about a consumer that's still spending, still resilient, increasingly choiceful. And this is something we were talking about with Michelle Meyer yesterday, actually, how the interaction with the labor market looks. Of course, we haven't been getting a lot of labor market data, but should we see a meaningful downdraft when it comes to the U.S. Employment situation, Mark? How does that typically affect the consumer? Is that something you see happening in 2026?
Yeah, it's fascinating, and we have seen unemployment tick up a little bit. We're at 4.4% now. But, if I think back to when I was younger, we considered 5% to be full employment. So 4.4% historically is still a relatively low number. 5.5% is more like the historical average. So we're doing okay on that front. I do think it's worth mentioning that, we've seen weakness in the job numbers. We haven't seen a lot of job numbers lately, but we have seen weak ones recently. But it's important to recognize that we don't need as many jobs in this economy to keep unemployment level, right? The Fed put out a paper not too long ago, and they said the number was around 30,000 new jobs a month to keep unemployment at a flat rate. 2 years ago, that was 250,000. So we needed a lot more jobs then to keep the economy running along smoothly. We need a little bit less now.
All right, Mark, really fascinating stuff. Great to get you on. Mark Mathews there, the chief economist over at the National Retail Federation, projecting a relatively decent holiday shopping season. Katie Greifeld. I was also looking at some other data that the NRF put out on the toys, the most popular toys. You know what the most popular toys are?
I couldn't even begin to guess.
Well, you should guess, because they're basically the toys that were probably popular when you were a kid, when I was a kid.
Beanie Babies.
Legos, Barbie, Hot Wheels, doll, just a generic doll. I don't know who that kid is, but
I was actually recently looking at a gift guide because I have no idea what to get my husband. And there's a lot of folks recommending Legos for adults. I don't think I'll get him that.
Yes, that's the whole thing. Have you seen what Lego did? We have to get Lego on. They've made a whole push on this.
Yeah, well, apparently they're super popular, even among adults, including yourself, it seems like.
It is, absolutely. You can get me one of those. Labubu is on the list, by the way, number 4.
Wonderful.
There you go. All right, coming up, we're going to talk about Deere. Those shares down, actually having the worst day since August after our lackluster earnings report. A deeper dive as part of our Stock of the Hour. That's up next here on The Close on Bloomberg. All right, welcome back to The Close. It's time now for our Stock of the Hour, and we're focusing in on Deere. The share is down more than 5%, the worst one-day drop for the stock since at least late August. This after the tractor maker's forecast for 2026 missed estimates. The outlook suggests difficulty in predicting a recovery in the U.S. farm economy due to tariff turmoil. Joining us right now is Bailey Lipschultz, who helps covers markets for us here at Bloomberg. All right, so is this really about tariffs, or is it about something broader?
It's about tariffs. It's also about kind of the uncertainty around the farming ecosystem. So how confident are people to invest? And I think that's the big question when you look at the entire industrial ecosystem, is whether it's Deere, whether it's Caterpillar, how much conviction do these companies and these individuals have that they're going to be able to either afford reinvesting in these goods when we're talking about a time where seeds are more expensive and everything's more expensive? And will they actually see the ROI at the end of the day? An ugly print. Management's talking about 2026 being the bottom of this large ag cycle. So whether or not that proves to be prudent remains to be seen. But it is an uncertain time, and it's going to be an interesting reporting stretch for companies that really are catering to consumers, catering to companies.
Yeah, it's interesting, too, to stack up Caterpillar versus Deere, because you take a look at just their year-to-date performance. Caterpillar up 60% on a total return basis. Deere, for example, only up about 12.6%, which is, certainly better than a lot of folks are faring right now. But I do wonder, what explains that divergence? Because I would imagine the same sort of macroeconomic factors affect both companies.
But I think that when you look at a Caterpillar, you do have kind of the tailwinds for infrastructure, so the ability for some of those bigger products to be sold to companies, whereas Deere, for the most part, is catering to individual farmers and people really actually kind of working the land, as opposed to Caterpillar, which has offerings that are similar, but does have kind of a different lever to pull when you're looking at whether it's kind of just reinvesting in infrastructure.
Yeah, and Deere is a little bit of a different company, but I'm still a little surprised because I thought Deere got a lot of their business from overseas as well, so that even if U.S. farmers were hurting, there was still a decent market for them in Asia and Europe and other places.
But you're still dealing with what the tariff impact ultimately looks like. And so when I look at the J.P. Morgan analyst basically saying normalizing for tariff impact, it implies shares could settle around 460 in the near term. We're at 471. So if you're a Wall Street analyst who does have a neutral rating, but you're talking about this sitting right around where it is when investors, even when we're pulling back from AI, want to put money to work, not great.
All right, Bailey, great reporting.
I would like a tractor,
always.
actually.
You can
Maybe
get one.
Is that your Christmas gift?
It would be nice. I've always kind of wanted one. I have no practical use for it.
A Lego tractor,
but I
perhaps?
No, I want a real one,
a
actually.
Real one. All right.
Yeah.
Where would you park it?
Anywhere I want.
He would dig a hole and then put the tractor in it. Bailey Lipschultz, great reporting as always. That is our Bloomberg's Bailey Lipschultz. Have a great Thanksgiving. Now coming up, we're going to take you to the closing bell with Jeff Blazek. He is multi-asset co-chief investment officer over at Neuberger Berman. That conversation up next. This is The Close.
Welcome back to The Close, just about 10 minutes away from the end of the trading day. And really, Katie Greifeld, we could really call it the end of the month, really. I mean, we have one more trading session, but that's basically a half day on Black Friday, where volume is usually rock bottom for the year. But you look at the turnaround here in the markets, not just for today, but really over the past 4 days, and at least on the S&P 500, it's now erased almost all of the losses that it had for the month of November.
Yeah, it's pretty fascinating. We'll see if we do get to that break-even point. I will say, you talk about rock bottom volume on Friday. Today could also take the cake, too, because you take a look at the trading volume right now, 25% below the 30-day average. Suppose that's not surprising, but still, this buying that you're seeing, not necessarily on the back of really heavy volumes. The NASDAQ 100 leading big tech, the small caps really outperforming here, up about 1.2%. We've heard a lot of bullish cases for small caps. We'll see if those pay off in the new year as well. And Bitcoin, not quite above $90,000 a coin, but getting close. Yeah, and it's interesting, too. You talk about those small caps, that outperformance, not only in the Russell, but we talked about the equal weight, S&P equal weight index and Dow transports and all that. And I guess, in theory, that should be a good sign here for a continuation of the rally, even if it doesn't include some of the biggest and heaviest weightest names. Joining us right now to help us count you down to those closing bells is Jeff Blazek, multi-asset co-chief investment officer at Neuberger Berman. Jeff, great to see you here.
Good to be here.
I do want to talk about kind of what we saw over the last few weeks, because yes, it was a sell-off, but we also saw a pretty significant rotation. So first, I mean, we talk about healthcare sort of leading the charge. A lot of consumer discretionary and consumer staples names are really sort of getting their time to shine over the past few weeks. And I'm curious as to what you think of that. Is that indicative of something? Should we be reading something into that?
Well, I think the thing that's best indicative of is fundamentals win. And so when we look at the healthcare outperformance, which is quite notable in the month of November, it's being driven by healthy organic growth trends or meaningful developments on promising pharmaceutical launches, things like that. So the more the fundamentals win, the more we are happy as stock pickers. I would also highlight the rotation that you're alluding to, which is the non-profitable AI speculative trade has been on the ropes. That rotation we will wait and see. But AI as a mega theme, I think it's over now. It's going to bolt out into a lot of different directions in terms of micro themes. And some of this rotation, when you mentioned staples, might be the fact that we're seeing AI permeate into their operations as they begin to harvest some improved efficiencies.
Well, this gets to this idea of kind of where we are in this AI trade. I mean, we're coming up in a few days here on basically what is the official 3-year anniversary of ChatGPT being unleashed to the public here. And for the last 3 years, it's pretty much been about more or less chip stocks and more or less NVIDIA. But we've seen Alphabet, we've seen a lot of other names now start to get some shine. But when we talk about the use cases, we're going to start to see companies talk about productivity improvements, cost savings, things like that. You're confident of that?
Well, we're going to see them talk about it. The KPIs are going to be really tough to measure, and these are not going to be the sort of thing that SEC filings will be able to give us quant data that's output. So it's going to be a lot of hearing what the management teams say. Ultimately, you have to observe it in the profitability and the trends that you're seeing from that. The other thing I'll just say from AI is there's going to be growing dichotomies. This is not going to be a blunt beta basket anymore. Those dichotomies are going to be things like macro and micro. So macro, the fact that productivity is surging in the US, and micro, the bottom-up drivers. It's going to be a dichotomy of winners and losers. And to us, the wrong term to use for this phenomenon is bubble. Bubble sounds like a everyone wins or everyone loses sort of mentality. It's going to be a lot more granular in terms of how it plays out. And it's now an equity and debt story on top of all of that. So a lot of more dimensions to it.
Well, a lot to dig into there. I want to talk about the fact that there's going to be winners and losers, because it feels like a lot of folks have been focusing a lot of their attention on identifying the winners, trying to figure out who is going to be the disruptor. What about the people and the companies being disrupted? Is it too soon to really have a good sense of who might fall into that basket?
Well, I'd say we have yellow flags, not red flags on that. And so our equity analysts at Neuberger have been doing a lot of work cross sectors. So not only with chips, not only with the hyperscalers, but looking at software companies, looking at business services, because you can start to grab some themes together around who is better positioned from AI and who might be poorly positioned. So the more, for example, software companies are embedded in the infrastructure or data analytics, those stocks generally are doing better. Those that are pure play software as a service, where they might be more vulnerable, where the end user may say, I can do this in AI now, I don't need to pay you this recurring revenue stream anymore. Those companies, at least in the equity price performance, have been selling off. Now, technically, they're still growing. Maybe they're seeing a deceleration in the growth rate, but that's the yellow flag I'm pointing at. It's not a red flag, but I do think it's a cautionary tale of how this could play out.
Well, let's talk about the other point you made, too, that this is not only just an equity story, this is a debt story as well. We've seen a lot of these big tech companies really hitting the bond markets hard to issue debt. And there have been some concerns bubbling up, especially when you take a look at what's going on with Oracle. But when you look at that trend more broadly, the fact that big tech is hitting the bond markets, how does that change, if at all, how you think about the equity investments in those companies?
It's a dramatic change in terms of how this plays out. So first of all, we have to use a new term, not return on equity, return on invested capital, to acknowledge the broad capital stack that is now aligned in investing in AI in one form or another, whether you're a debt holder or an equity holder. It changes the equity story, too, because a lot of these companies that have had net cash on their balance sheet for years and we're actually earning interest income, we'll see that'll fall, it'll invert and become interest expense. And so it's going to be a new driver of net operating margin. And so that's another game changer as well. It raises the stakes. And ultimately, I think we do observe some of those lesser capitalized companies that don't have as much operating cash flow as they would like. They're now at the fulcrum, as we would call it. So we look at the credit default swaps of some of these weaker balance sheets, still investment grade, but weaker balance sheets. And they are now becoming more of an expression of the AI trade from a credit standpoint.
All right, Jeff, always great to have you. Jeff Blazek there, multi-asset co-chief investment officer at Neuberger Berman. Now, we do need to get back to some breaking news out of Washington, D.C. Those two National Guardsmen that we told you about a little bit earlier that had been shot in Washington, D.C., we've now confirmed that both members have died. This is according to the West Virginia Governor Patrick Morrisey. Those National Guardsmen were part of West Virginia's National Guard deployment to the nation's capital. You can see the scene there. That is in downtown Washington, just a few blocks from the White House, the Treasury building, basically the downtown area, an area very, very immune to violent crime. We've gotten a statement out of the president. We're waiting for more official statements from government officials about what exactly transpired here. But based on what West Virginia Governor Patrick Morrisey is saying, that both of the two National Guardsmen that were shot have now died.
And we have heard from Vice President J.D. Vance speaking from an event in Kentucky saying we still don't know the motive. There's a lot that we haven't figured out yet, so we will continue to follow this story closely here. Meanwhile, moving closer to the closing bell, right here.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Katie Greifeld. We're taking you through to that closing bell with a global simulcast. Joining us right now is Carol Massar and Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. As we count you down to the closing bell, it's just about a minute and a half to go. And we are going to focus on the markets here for just a bit here, Carol, as we see a pretty sizable rally on our hands to close out the month of November.
Yeah, kind of interesting to see what is happening in the trade this week. And even, as maybe there's some, light volume and so on and so forth ahead of the holiday season here and Thanksgiving holiday, it does feel like investors some optimism. And a lot of it probably has to do with expectations that indeed we get another cut by the Federal Reserve. That meeting, the FOMC meeting, just a few weeks away now, Tim.
Off our best levels of the day for the S&P 500. And interestingly enough, earlier in the session, it was more broad-based. We saw more than 4 stocks in the S&P 500 higher for every 1 stock that was lower. But now we're seeing 372 higher and 129 in the S&P 500 lower right now.
And really, what a rally we've seen this week alone. Probably not a lot of volume backing that up, but still, as Romaine pointed out earlier, when it comes to the month of November, the S&P 500 getting closer and closer to erasing those losses. This is the last full trading day of November, but we do have that half-day session coming up on Friday.
We should also point out a lot of the key technical levels that were really under pressure just last week. Apparently, at least for the S&P and the NASDAQ, they've survived that test, now closing back above some of those intermediate moving averages here on this Wednesday afternoon. Green across the screen for most of the major indices here in the U.S., including the Dow Jones Industrial Average, higher by more than 300 points, or 0.6%. We'll call it 0.7% to be precise. A similar move on a percentage basis for the S&P 500 higher. The NASDAQ Composite up about 0.8%. And you had relative marginal, keeping pace here. The Russell 2000 up about 0.8% here to close out the day. It had been up more than 1%, but seeing a little bit of profit taking into the close.
All right, I'm going to go back to the big caps, the S&P 500. We did see a few more names higher earlier in the session overall. Right now, though, the S&P finishing with a gain, as we said, but about 360 names in that index higher at the close, 142 to the downside, Katie, 1 unchanged. But again, we saw more than, 400 names gaining earlier in the session.
Yeah, and you saw pretty good breadth when it comes to the sector performance as well. As you can see on the screen, information technology was your biggest gainer on the day in terms of points contribution, followed by financials, consumer discretionary, and consumer staples. In terms of what didn't exactly perform on this Wednesday, healthcare falling a bit, and communication services down about 0.5%. A lot of that decline came down to Alphabet giving back some of the gains that we've seen that stock enjoy over the past couple days.
Occasionally has to give back. What is it up? Almost 70% this year?
What goes up? What goes up?
2 sides to every trade. Hey, let's get to some of the individual gainers, if I may. I'm going to start with Dell Technologies. It's a top gainer in the S&P 500. This one finishing up 5.8% on the day. The company reported earnings late last night. It did raise its full-year forecast. Analysts noting growth in AI server shipments as a highlight due to sustained demand for machines needed in the current data center boom. So just let me throw some numbers at you. Dell booking $12.3 billion of AI server orders on the fiscal third quarter. That ended October 31st. It shipped $5.6 billion worth of the servers and ended the quarter with a backlog of $18.4 billion. The company raised shipment projections for the year to $25 billion from $20 billion. So some outperformance there. Let's go to the retailers. One in particular, because we've seen their earnings coming out over the last couple of weeks. Urban Outfitters finishing the day with a gain of more than 13%. The owner of Anthropologie and Free People, following positive reports from Abercrombie and also Gap. We got that's some of their peers, so we also heard some upbeat stuff from them. Shares of Urban Outfitters jumping. The company reported net sales for the third quarter that beat the average analyst estimate. Stock, by the way, it's up roughly 40% year to date, but about 15% of the float is short. JP Morgan and Barclays both raising their price targets on that stock. And I'm going to finish up with Robinhood Markets. That stock up about 11%. It's the number 1 gainer in the S&P 500 today. Company announced that it and Susquehanna International buying a majority stake in LedgerX. That's a U.S.-based derivatives exchange once owned by FTX, now run by Miami International Holdings. The deal giving the companies access to the prediction markets, which is something we've talked about a lot here in 2025. By the way, Robinhood Markets, it is up about 235% year to date. Quite a run.
Okay. Well, if you'd predicted that I would do decliners next, you would be correct. Starting with John Deere, Deere & Company, down 5.7%. The company's weak forecast for the year ahead reinforces the difficulty in predicting a recovery in U.S. farm economy due to uncertainty over the impact of tariffs and trade deals. The company's forecast for 2026 net income of $4 to $4.75 billion missed the average Bloomberg estimate and would be a drop from the $5.027 billion reported for the year just ended. Once again, shares of Deere down 5.7%. Also, taking a look at Alphabet Inc., GOOGL down 1.1%. It was actually on a points basis the biggest decliner in the S&P 500 today. that company, those shares giving back a bit of the recent rally. Just to put this recent rally into context, it's up 15% just since November 11th. It's up 34% since September and up just roughly 70% so far this year. Giving back a little bit of that rally, down 1.1% today. And finally, Zscaler down 13%, falling the most going back to September of 2024, so in more than a year. This after the company forecast annual revenue that came in only slightly above estimates. Investors certainly wanted to see more. Romain.
All right, let's check in on yields here. Kind of a weird day here. Your 10-year yield has been sort of straddling the line on that 4% level. Looks like it's going to settle just below that. You saw yields on the longer end of the curve also move lower, including the 20 and 30-year, though a slight uptick in yields on the 2-year yield, up about 2 basis points, despite the fact that when you look at pricing in the Fed funds futures market, you now have most traders now anticipating, or at least betting on about a 90% chance right now that we're going to get a rate cut, a 25% percentage point rate cut at the Fed's meeting on December 9th and 10th.
Yeah, man, how that has changed since the last Fed meeting and what we've heard from Jay Powell. All right, guys, that is a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Have a good and safe Thanksgiving holiday. And some of us will see you on Friday when, of course, trading resumes. Shortened holiday session. Katie Romain finishing there on the close on Bloomberg TV, and Tim and I right here on Bloomberg Business Week Daily on Bloomberg Radio.
All right, stick with us. A lot more coming up here on The Close with Black Friday up ahead. A special focus today on the retail sector. Katherine Black, partner over at Kearney, going to be joining us in just a bit. This is The Close on Bloomberg. We want to go back to that breaking news out of Washington, D.C. 2 members of the National Guard have died in a shooting just blocks from the White House. This is according to West Virginia Governor Patrick Morrisey. There's still a lot of details that we don't know, and we're still awaiting for more confirmation as to exactly what transpired this afternoon down there in Washington. Joe Matthew is the co-host of Balance of Power. He's there at our offices in Washington, D.C., which are just a few blocks away from that crime scene. And Joe, we've gotten confirmation from the West Virginia governor about these 2 National Guardsmen that they have died. What more do we know?
Well, it certainly reminds us as well that these National Guard troops who have been deployed to various American cities, including our capital, are coming from all different areas in the country, which is why it takes the West Virginia governor to confirm this terrible news. As Patrick Morrisey writes, it's with great sorrow we confirm both members of the West Virginia National Guard shot earlier today have passed away from their injuries. This would have been news, apparently, to the vice president himself. J.D. Vance was speaking moments before at Fort Campbell in Kentucky and suggested that they were hospitalized, as the president did as well in his Truth Social post. We just saw a post as well, Romain, from the Treasury Secretary, remembering this is at 17th and I Streets, just about a block north of the White House, which is, of course, next door to the Treasury Department. And that was in lockdown for some time before an arrest was made. Bessent writing, the National Guard has been working around the clock to keep Washington, D.C. safe, and their presence has made a real positive difference. Referring to this deployment, Romain, that was very controversial and, in fact, was found to be illegal in a federal court. That ruling is being appealed as these young men and women walk the streets of Washington in the name of fighting crime, in many cases finding themselves picking up trash in parks like Farragut, where they were located when this happened. There's a lot that we don't know, though, whether they were targeted or whether something greater was happening when this took place, Romain. We're waiting for details on all of that.
And President Donald Trump posted on social media that the suspect was, quote, severely wounded and will, quote, pay a very steep price. Let's talk a little bit more about the deployment, because they were deployed in Washington in August, as I understand it, Joe. Their deployment was recently ruled illegal by a federal judge, but they didn't necessarily have to vacate immediately after that ruling.
That's correct. It was a deployment that began with great controversy in August and ended up being one that was somewhat embraced by the mayor of Washington, D.C., Muriel Bowser, who the president actually complimented in her announcement just this week of her plans to not run for re-election. But, of course, the president has tried this in a lot of different cities around the country to different ends. Washington is special because it is the capital city, the federal city, that gives the president much more leeway to deploy troops in this way. And even in that circumstance, to your point, Katie, was found to be illegal. That will be appealed and is in the process of being appealed. But as we walk around our streets here in Washington, D.C. this Thanksgiving holiday, you will still see some small collections of National Guard troops walking around. Many of them have been sent to that very area where the shooting took place.
All right, Joe, appreciate your reporting. Joe, Matthew will have much more at 5 p.m. Eastern on Bloomberg's Balance of Power. We will continue to follow this story on the close and bring you updates as we have them. This is Bloomberg.
Welcome back to the close, a fourth straight day of gains for the major U.S. equity indices, including the S&P 500, which closed up 0.7%. But you actually saw some pretty significant strength coming out of the cyclical space. When it comes to small caps, mid caps, and some of those more economically sensitive sectors, they really kept pace and, in fact, to some degree, outperformed. The Dow Jones Transportation Average up 0.8% here on the day. But, of course, tech still shining. A big bump up here in the S&P 500 tech index, up about 1.3%. But that did not match what we saw in the Mag 7, which shows some significant rotation within the tech sector. Gold getting a bid, something we haven't talked about, well, now around that 4,100 level here. And you see the Philadelphia Gold and Silver Index, which tracks the miners, was up 5% on the day, Katie.
All right, let's take a look at some of the individual equities moving on this Wednesday. I want to start with Robinhood, closing up nearly 11%, best day since late September. The news here is that the company announced it's buying a majority stake in Ledger X, that is a U.S.-based derivatives exchange alongside Susquehanna. Alphabet, we've been talking a lot about what a big run Alphabet has been on, cooling a little bit today, down about 1%. And then Deere, we were talking about this with Bailey Lipschultz a little bit earlier, reporting earnings and not exactly impressing. Deere shares falling 5.7% on the day. Meanwhile, we're drawing closer to the holiday retail rush. Recent data showing consumer spending per person on gifts, food, and other seasonal items dipping this holiday period, with shoppers anticipating higher prices from tariffs. Meanwhile, you have analysts over at Citi saying that Black Friday is, quote, given too much attention, with the post-Christmas week becoming more important to most retailers. Katherine Black, she is partner at global management consulting firm Kearney, where she leads mass market retail. Katherine, great to see you in person here. So we've been talking about the creep of Black Friday, and now, it's weeks long at this point. And I wonder if you agree with that analysis over from Citigroup, that as it's sort of expanded and crept, that maybe it's not as important as it used to be.
Well, look, consumers tell us that this big sales are still very important, but you're absolutely right. They are staggered. It's not all, say, one day like it used to be. And that comment about post-Christmas is interesting because consumers definitely want gift cards. You heard that from NRF earlier, but also that's what people plan to give. It's the second most popular thing people are planning to shop for as a gift to others. So that does drive post-Christmas spending. I don't know that it's more important this year because I also think consumers are going to stop. They're going to run out. They're going to hit a budget number and think, I've spent too much. And that's one thing that we're really hearing from consumers this year is they're going to spend, but they may not get the extra thing that they would have gotten in the past.
That is such a fascinating point, that burst of shopping activity that we see after the gift-giving holidays is maybe due to the fact that people are giving gift cards increasingly. And I wonder what's driving that behavior, that uptick in basically giving gift cards.
Okay, my personal opinion is I think we live in an incredibly personalized society. We've been personalizing for over a decade now. Consumers want specifically what they want, and the gift givers in their life know that. And the easiest way to manage that is through a gift card. It's what people ask for, and it's oftentimes the easy solution is buy a gift card. They get what they want. You don't have to worry about sizes or returns.
Yeah, but but also, I thought it was supposed to be the thought. You're supposed to put thought into people. The gift cards. I mean, I know I'm guilty.
Do you have a teenager?
I do. So yes, I trust. Trust me, I'm guilty of it too. I'm a hypocrite. But it also gets to this idea too. When we start to talk about, I see all these numbers batted around from NRF, from Adobe, and others, basically suggesting that we're going to see an uptick but that's not inflation adjusted.
Right.
So my question is, are we truly spending more this year than in past years?
Yeah, I mean, on a units basis, I think we might see some slight growth in that, but definitely I think inflation is a part of the big numbers that you're seeing. And there are a lot of mixed trends this year. We started off with tariffs, which hike up pricing. We just came out of the longest government shutdown in history, which will absolutely have an impact. When I talk to retailers who are concentrated in that sector, they say we felt that. We felt that by a few percentage points. But consumers do want to spend, and so I think it's going to be a really uneven spending throughout the season.
One thing last Christmas season, last holiday season a year ago, it seemed retailers held the line a little bit on some of the discounts. I mean, they didn't go hog wild.
Yeah.
I'm hearing a lot different heading into this season, and one of our columnists who's just fantastic in covering this basically says that if you see a 25-30% discount today or this Black Friday, wait, because it'll probably be 40, 50, maybe even more in the next couple of weeks. Does that sound plausible to you?
I think if consumers don't come out and spend big, then that absolutely may be plausible. You always run the risk. I don't think there's a lot of backup inventory, especially on hotter items. So I think retailers will turn to that strategy if they need to clear their inventory by Christmas. And that's another thing with those gift cards is what inventory will be left at the end of the season.
That's a good point.
But they have to manage that closely.
Yeah.
And I'd love to get your thoughts on basically another trend that we've seen emerge, great reporting out on the terminal when it comes to Bloomberg News, basically that folks are using this promotional period of time to stock up on household necessities when it comes to dishwashers, when it comes dishwasher fluid, that is pet food and the like. And I wonder if you're seeing any of that people are increasing their spending right now in this period, but not necessarily on gift buying.
Yeah, there's definitely still gift buying going on, but consumers do like to spend on themselves. And you're right, a lot of it is on more essentials or maybe a slightly more premium version of an essential when it goes on sale. The biggest and most consistent theme that I've heard from consumers really for months now is they want to be savvy shoppers. They are looking for deals, and the proportion of consumers who consider themselves deal hunters is higher than I've actually ever seen it in my career. It's at an all-time high. And so I think when consumers see sales, particularly on something they know they need, they feel good about buying it then. If they're buying something they don't necessarily need, or it's not a gift that they have a particular person in need in mind for, I think that comes with, at this particular moment, a different psychological factor for them, and they're less willing to shell out unless they're doing really well economically.
Well, it's the psychology of it that I find really interesting, because if you have that shopper who is bargain hunting, does that lead to a situation where retailers are always offering some form of a promotion of a sale, and as such, it kind of loses its meaning?
You know, I think the smartest retailers are doing a really personalized version of what you just said, which is finding the promotions that will draw a shopper to them and hopefully getting them to buy some of their other items while they're there. That's a pretty historical retail strategy, but we still see a lot of big sales and not highly personalized. I think the smart retailers are personalizing more to capture on that.
So, Katherine, this gets to this idea, though. Where does this go kind of into next year? Because we came into this holiday season concerned about the state of the consumer, concerned about their not just willingness to spend, but their capacity to spend here. Is there carry through? I mean, traditionally, is there carry through out of the holiday season?
Well, as pointed out by Citi, we do see some of that gift card spend. But, you know, going into next year, we're going to start to lap some much bigger inflation numbers. And that starts to get much harder to sustain as well in just the pure sales numbers. Consumers, I think, will continue to spend, but they're cautious. There's only about a third that say they think they're going to be better off next year than they are this year. And so I think consumers are adjusting as they go through the year, and they're making real-time decisions on how they're going to spend. So one to watch carefully.
Yeah, I mean, and one to watch. And it also gets to this idea, too, as how retailers capitalize on this. You know, I mean, we talk to these retailers a lot, and they always talk about, okay, yeah, we're getting people into the store during the holiday. Everyone wants to kind of be around. But how do you keep those people, you know, through the year, particularly for more discretionary items and things like that? And do you see them have these stores and these companies have a strategy to try to do that?
Well, look, the best ones, absolutely. The best ones, and we know that retailers really grow when they can capture more from their best customers and get more people enticed in their offer. And the fastest way to grow is really through catering to those customers that you're gaining and sticking with them throughout. So that's absolutely a strategy in their marketing and how they assort for their store. It's going to be interesting because consumer habits are changing rapidly, and so it's one to continue to watch. But we are seeing also, too, a lot of e-commerce growth.
Right.
And it's much easier to do that tailoring in an e-commerce environment than it is in an in-store environment. So I think we will continue to see more of that.
Well, Katherine, that's what I've been wondering about, how people are actually shopping. Whether, when we talk about Black Friday, are we talking about people still actually physically lining up, going to the mall and going into stores, or whether this activity has primarily shifted online at this point?
Well, I think most of the growth is coming through online. There will always be a segment of consumers who are going to go into stores and shop. And in our research back in September, about 15% of consumers said, I'm going to do more of my shopping in store this year. The vast majority were planning to grow through e-commerce or not make much of a change at all. So that's the real shift that we're seeing. But there will always be some level of store traffic. And I bet we all know somebody who absolutely loves a Black Friday sale, and they love the rush of it and going into a physical store. And so that persists, just maybe not in as big of numbers.
All right, Katherine, I have to leave it there. Katherine Black, partner at global management consulting firm Kearney.
All right, meanwhile, let's take a look at how markets closed on this Wednesday, the last full trading day of November. We have that half-day session coming up on Friday. We'll see if that's going to be good enough to push the S&P 500 into positive territory into the month of November. The S&P 500 finishing up about 0.7% higher. That was led in a big way by big tech. You saw the NASDAQ 100 finish 0.9% higher. We know that Alphabet gave back some of its gains today, but still the overall sector really enjoying a pop on this Wednesday. Meanwhile, Bitcoin also catching a bid, Romaine, and it looks like we are above $90,000 a coin. All right, meanwhile, we want to get back to that breaking news. West Virginia's governor now saying he's received conflicting reports on the condition of the 2 National Guard members shot in D.C. Balance of Power co-host Joe Matthew joins us now. So, Joe, we know this is a fluid situation. Details are flying around. And what do we know so far that has been confirmed?
Well, it's all, again, coming from the governor of West Virginia. To your point, Patrick Morrissey, back on Twitter to say we are now receiving conflicting reports about the condition of our 2 Guard members who were shot only about a block away from the White House, just a couple of hours now, maybe less than that, actually. 17th and I Streets, if you know the grid, in downtown Washington, D.C., near Farragut Park. The governor writing, our prayers are with these brave service members, their families, and the entire Guard community, having already heard from President Trump, who tweeted about their condition at 2 separate hospitals he mentioned. We know that there was a helicopter that took off, had to take off from the National Mall, which is also very close to that location. So we're not going to speculate on anything. We are just simply reporting on what we're hearing from the administration and from the governor of West Virginia. And we are standing by, this is important, for a news briefing on the ground right near where the shooting took place, Farragut. So that will be the official word here from authorities who have been scrambling to get their arms around what happened.
Joe, I know we can't speculate about what happened, but I am curious about what the potential response to all this will be once we do sort of get the real details and we have time to digest what happened. We spoke with you a little bit earlier on this program. You talked about how unusual it was to have National Guard troops deployed in Washington, D.C. During peacetime. And we know the president has made it very clear that he sees a role for National Guard troops, not just in D.C., but in other cities as well, to fight what he calls domestic crime.
That's correct. And he did refer to the safety on the streets of Washington, D.C. in a Truth Social post just a short time ago, saying that it is now a safe city, one that had been riddled with crime. But of course, that was an argument to begin with, knowing that crime rates had been falling here in Washington. But the president had leeway here in the federal city to deploy troops ruled to be illegal in their deployment by a federal court, but a much different prospect than sending them, for instance, to Chicago or to New York, Romaine, or as we've seen, cities like New Orleans and Memphis. So this is something that's been in the air in Washington for some time. We're used to the sight of seeing National Guard troops walking the streets. They had been armed for a period of time, and they're going to be here while this case is being appealed. The wrinkle that this brings to the story, though, is an important one, Romaine, and we'll be deeply curious to hear what we hear from authorities.
All right, Joe, really appreciate your reporting. Stay close by. That is Balance of Power co-host Joe Mathieu. This is The Close on Bloomberg. Well, the busiest Thanksgiving weekend on record for air travel will follow the longest government shutdown in history. You throw in a cold snap and thunderstorms, shaping up to be a challenging weekend for air travel providers. Joining us to discuss the pressures facing the airlines and their employees is Sara Nelson. She is International President of the Association of Flight Attendants. Sara, really great to have you with us. We've been talking about this from the traveler's perspective, and really the narrative has been travelers bracing for this weekend, given all the disruptions we've seen when it comes to the airline industry. Give us the perspective from where you're sitting when it comes to the folks who are actually staffing those airplanes.
Well, thanks so much, Katie. And first of all, I'd just like to recognize the crews and the workers in the airport who are away from their families this holiday to make sure that other people can get to their families. We are thinking first and foremost about safety and security. When you see delays or cancellations, that is typically simply because it's unsafe to go, or it's unsafe to go at that time. So we want the traveling public to know that we're here to help you along your way. But there's some things that you can do to help yourselves too. Check on your flight before you leave home. Give yourself plenty of time when you come to the airport. Pack your bag from an empty bag so that you're not accidentally putting any prohibited items in that bag. Carry an empty water bottle that you can fill up at the water stations, and a protein bar in case you're not able to get food or you're on an extended delay. And look up from your phone and make eye contact with the crew when you get on board. We're always looking for helpers. We are understaffed, and many of the flight crews are not getting paid during that boarding time, but we're trying to make contact with you and look for our helpers and have crammed airplanes get off the ground safely and land so that you can get to your loved ones.
Well, let's talk about that a little bit more when it comes to staffing, because we heard from FAA Administrator Brian Bedford saying that when it comes to air traffic controllers, that the towers are adequately staffed when it comes to the holidays. What about when it comes to flight attendants? What do staffing levels look like right now?
People should know that the airlines are staffing at FAA minimums. So while we may have enough staffing levels to make up if there's a delayed flight, having a standby flight attendant able to take that flight, those things are in place. But if we get into a place where we've got storms added on top of this and the delays cascade, sometimes the crew that you're waiting for is working a flight that is sitting out on the tarmac or hasn't landed yet. We're not in place yet to get on your flight. So it's not as though people are not already at work trying to fill those staffing roles. When there's a real backup of cancellation and delays, that means that crews get out of position to be able to work the next flight too.
What kind of changes are made, Sarah, typically around these holiday weekends, or at least the weekends where we do see a huge uptick in travel, like Thanksgiving, Christmas, et cetera?
Usually there is an effort to provide overtime pay or incentive pay for people to pick up additional flying, especially if there's a storm that rolls in. You run into a situation where in a lot of our contracts, we have negotiated that management can have sort of an emergency pay put in place where people may decide, you know, it's not worth it to be away from my family if I'm making my regular pay, but maybe if I make a little bit more, I'll head out there. We also typically try to negotiate holiday pay so that people are actually getting paid more. But you know, this is difficult when we've got half of our contracts in place and half that are not. People are not making really a living wage to come to work, and it's hard to incentivize people when it's also very, very difficult work. You have people who are not used to traveling, so there's a lot more questions. There's a lot more confusion. There's a lot more for the crews to do. It's a very, very labor-intensive time for the people on the front lines.
Well, that's what I'm curious about, Sarah, as far as like new entrants coming in. And this is just purely my own anecdotes. I travel a lot, and I've taken note of the age of a lot of the flight attendants I see. And I do wonder, and that's not a diss on anybody, but I do wonder about how many new or younger people are coming into this industry relative to maybe when you were starting out.
We've seen a lot of hiring since COVID. So you have a lot of people who are just starting out on the career. And you're right. When you have seasoned flight attendants who have been through these holidays and have that experience under their belt, a lot of times they'll know what to expect, can sort of prepare for that. But you know, we have really, really well-trained flight attendants who are also experts in de-escalation. And the amount of people who come through and the conflicts that can exist when you have humanity jam-packed together, also with a narrative in this country that we're divided, that is really a recipe for a disaster. And flight attendants really expertly keep people calm, people calm down. And it's very few flights that end up on the evening news.
Yeah. I am curious, just thinking a little bit more long-term, Sarah. We heard from Sean Duffy, the transportation administrator, the other day, gave an interview on another network talking about kind of reigniting the golden age of air travel. I think we're both too young to really remember that. But it sort of harkens back to this apparently time where, you know, it was sort of a luxury experience. Do you think that air travel is going to go back in that direction, or is it going to be more of a balance between those folks who do want a premium experience and those folks who, quite frankly, just want a rock bottom price to get from point A to point B?
Well, let's make it really clear. The golden age of air travel was not accessible to everyone in America. It was usually, you know, it was a lot of men, it was a lot of white men, and it was a very sexist time for flight attendants. And so, you know, well, we can think about the more space that we had and the roast that we used to carve in the aisle. And I can talk about all day long about all of the glory of that time. But what we also aren't talking about is the accessibility. Air travel is way more accessible today. Many more people traveling. Our skies look like our nation looks. And so do flight attendants and other crew members and other people working in these jobs. So there's some things that I wouldn't necessarily want to return to. Now, the staffing and the space and the ability to take care of people, we all would love to see that. But there, you know, air travel is really about bringing people together, and this is about practicing solidarity, and it just doesn't work if it's not inclusive. And today, air travel is extremely inclusive, and that means that, you know, we've got to handle a lot of things. Flight attendants usually are at the tip of the spear of anything social or political happening in this country. We see it. And the more that we can lift up from our leaders this idea of treating each other with kindness and coming to the airport with solidarity in your heart, the more safe and efficient air travel is going to be.
Yeah, absolutely. Well said. Sarah, have a wonderful Thanksgiving. We'll catch up with you soon, I'm sure. Sara Nelson, International President of the Association of Flight Attendants. When we come back here on the program, we're going to turn our attention to the movie business, specifically Warner Brothers Discovery. The deadline for bids to buy out that company, well, that is next week. We're going to talk a little bit more about that when we come back after the break. This is The Close on Bloomberg. All right, let's talk about Warner Brothers. The company is said to be making a bold move, asking other media giants bidding on its business to sweeten their offers, adding fuel to the ongoing battle between Paramount, Comcast, and Netflix. Paramount making a play for the whole company. Comcast and Netflix apparently are only interested in just the film and TV side, really complicating where things go. But as deadlines loom, some decisions have to be made. David Joyce joins us right now. He's a senior analyst at Seaport Research Partners. And David, first let's start off with these, I guess it's kind of a soft deadline, but nevertheless, Zaslav wants to see something on the table, firmly on the table by next week. What are you expecting?
Yeah, this would be the second round of bids. We think that all of them have to really step up further, really to get the board to believe that there's value there versus the separation path that they've set. So we think that the board would probably be most likely would probably like a full offer rather than just for part of the company, but it really depends on the value ascribed to it, because the studios and streamers side is clearly what all of the entities are interested in. Paramount, Skydance presumably wants the whole thing, which would be easier for the board to say yes, I believe. But it really depends on the value that comes in for the studios and streamers side. But then you have to think of what happens to the value of the cable networks if it is still left on its own.
Well, that's what I'm curious about. If you do see a situation where Warner Brothers is willing to split that off, and meaning selling off that streaming side and leaving the broadcast side out on its own, do you think there would be a taker for the broadcast business or cable business?
There wouldn't need to be, really. I think it could be a global consolidation vehicle. The CEO of that, Gunnar Wiedenfels, has done a great job as a CFO at Warner Brothers. Has done a lot of cost cutting, so there would be a synergy play, but I think there also could be some kind of global lift of viewership if they can apply some new sort of a programming strategy. But I think you need to have the concept of Discovery Global being more than just a U.S. cord-cutting challenged asset, because there are some parts of the globe that are not losing subs to the degree you're seeing in the U.S., and there are areas where advertising is growing. So that is the benefit of having the global platform. So that should be part of the thought process.
And David, you cover, a bunch of the names that are involved here when it comes to the different bidders and, of course, the company itself. Who do you think Warner Brothers Discovery actually belongs with? Who would be the best steward, in your opinion?
Well, it seems like a lot of industry participants have the opinion that Paramount Skydance would probably be the most likely suitor, the most constructive suitor, because they have had some work together in the past on some projects, and I think that there is a pretty decent opinion of David Ellison and Skydance in terms of how he engages with the talent community, and that's very important here. Netflix historically has been pretty vocally against the studio business in terms of theatrical releases, and that's probably not going to sit too well with the board and the Warner Brothers history. So they would really need to change their tune on that. And then for Comcast, they're probably in the least financially advantageous position, given on how their stock has performed in the past year or so based on their broadband business. But this could be a little bit more existential for them. They might really need to do something creative, maybe bring in a third party. Because they're still subscale on the Peacock side, and at the same time they're also trying to spin off their cable network. So there are interesting dynamics for each of these three, but it seems like the industry participants would probably be more enamored with Paramount Skydance full offer.
For that offer, apparently those bids, those offers have run as high as $23.50 a share. You take a look at where shares closed today, just under $24. The company is said to want $30 a share in terms of value here. David, do you think that that's realistic in this situation?
It's possible. I think that the base case in my mind for a transaction would be that it needs to be done at least $27, but it really depends on how aggressive these firms get in determining just how necessary these assets would be under their umbrellas. So I think it is possible that you could get to the 30 level. I'm not necessarily holding my breath for it, but I think that you do need to have something significantly above where the recent Paramount Skydance bid was at $23.50.
All right, it'll be fascinating to see how it shakes out. David, great to get some time with you. That is David Joyce. He is senior analyst over at Seaport Research Partners. And sticking with the Warner Brothers bidding wars, let's bring in Alicia Reese. She is Senior Vice President of Equity Research over at Wedbush Securities. She covers one of the suitors, and that is Netflix. And, when you think about Netflix, where the business stands right now, is this a bidding war that they should try to win, in your view?
I don't think they need to. I think it's a nice to have, not a must have for Netflix. They have so much content. They have a global footprint, global subscribers, and they have they're dipping into sports in a reasonable way, not terribly expensive, but keeping with events. And they have some content that they're able to dip into theatrical in a light way as they put certain things on the screen that have already become popular, not relying on the theatrical release to become popular. On the other hand, if they do win this bid, I do expect them to be significantly more theatrical forward with the content that would come from Warner Brothers on the theatrical side.
And you take a look at Bloomberg News reporting, Netflix, apparently most industry in Warner Brothers film and TV library, not necessarily interested in buying the whole company here. Strategically, do you think that makes sense?
Yeah, they don't want any legacy media. They're a tech company, and they've done really well with the media that they've chosen. They like to procure internationally and spread it through their entire global footprint. It makes a lot of sense. There's no reason to go backward, especially as people continue to cord cut. And to the point that internationally there's still not as much cord cutting. Advertising is growing. That's a fair point. Yeah. But people generally do have Netflix already, and so again, it's nice to have, not a must have.
Sorry, Alicia, I have to interrupt here. Alicia Reese over at Wedbush Securities. We have to go back down to Washington, D.C. right now, where we're hearing from, I believe, the FBI director about that shooting of 2 National Guardsmen earlier today.
Is exceptional. We will work together collaboratively because this is a matter of national security, because this is a matter of pride. President Trump has been informed. We've been in contact with the White House. We will shortchange the American public with no resources to make sure we find and safeguard our nation's capital right here in Washington, D.C., and bring anyone responsible for this heinous act of violence to justice. I would lastly like to add to the American public and the world, please send your prayers to those brave warriors who are in critical condition and their families. They are here serving our country. They are here protecting everyday Americans and citizens around the world in our nation's capital. They are the heroes of this day, and we must remember them on this day and every day, and their families and the sacrifice they have made. I will now turn it over to Chief Carroll of the Metropolitan Police Department. Thank you.
Good afternoon, everyone. My name is Jeff Carroll. I'm the Executive Assistant Chief here at the Metropolitan Police Department. At approximately 2:15 this afternoon, members of the D.C. National Guard were on high visibility patrols in the area of 17th and I Street Northwest when a suspect came around the corner, raised his arm with a firearm, and discharged it at the National Guard members. The National Guard members, there were other members that were in the area. They were able to, after some back and forth, able to subdue the individual and bring them into custody. Within moments, members of law enforcement in the area were also able to assist and bring that individual into custody. At this time, as the director mentioned, the National Guard members are being treated at a local hospital. DC Fire and EMS responded to the scene to provide first aid for those individuals and transport them to a local hospital. The suspect in this case was also transported for treatment at a local hospital. Madam Mayor.
Thank you. I'm Muriel Bowser. I'm the mayor of Washington, D.C., and I, too, want to send my thoughts and prayers to the families of the guardsmen and to the guardsmen who are in critical condition in a local hospital. I am joined by members and leadership from the D.C. National Guard, from the West Virginia National Guard, United States Secret Service, Deputy Mayor Pia, Fire Chief Donnelly, and Metro's General Manager Randy Clark, and we join with the FBI Director in ensuring that MPD investigates, the U.S. Attorney prosecutes this case to the fullest extent of the law. I've had the opportunity to brief U.S. Attorney General Pam Bondi, who was speaking to the president when I called, as well as the United States Attorney Pirro, who assured me that this case will have her office's complete attention.
Mayor, was there any other suspect?
Chief.
Sure. So no, at this time, there's no indication that there was any other suspect. The one suspect that was involved in this incident, they were shot during the interaction, and they were transported to the hospital for treatment.
Mayor, does this validate the need for the National Guard here in D.C.?
What we know, Andrea, is that this is a targeted shooting. One individual who appeared to target these guardsmen, that individual has been taken into custody.
Mayor, can you tell us any more details on the condition of the two National Guardsmen and whether or not anyone else was injured? And a quick question follow-up for the FBI director. You said that we'll make sure we find the perpetrators for this act. So just to clarify, the person believed to be responsible is in custody and there are no other suspects.
Sure, so I can start out. Again, Chief Carroll from MPD. So both of the individuals, the guard members, they are in critical condition in a local hospital at this time being treated. At this point, we have no other suspects. We have reviewed video from the area. It appears, like I said, to be a lone gunman that raised the firearm and ambushed these members of the National Guard, and he was quickly taken into custody by other National Guard members and law enforcement members.
Have you got any sense of motive?
No, at this time, obviously, we're very in the preliminary stages of investigation. There's a lot of things, a lot of agents that are here from various federal agencies, law enforcement agencies. We have the full power of the FBI and our federal partners here in the task force. So we're looking at all those different aspects, but we don't have any motive.
Were the National Guardsmen armed, sir?
The National Guardsmen that were shot, I'm told they were armed.
Did they get off shots?
At this time, that's part of the preliminary investigation.
Do we know who shot the suspect?
Sure. So how the suspect was apprehended, as I said, the individual, the suspect came around the corner. He immediately started firing a firearm at the two National Guard members. So at that time, there were other National Guard members that were in the area. They heard the gunfire. They actually were able to intervene and to kind of hold down the suspect after he had been shot on the ground until law enforcement got there within moments.
And he was shot by a National Guardsman?
At this point, we're still investigating exactly who shot the individual. It's not clear at this time.
Were there DC policemen in the area?
We don't know what kind of weapon. There was D.C. police. It happened right in front of the Metro, although there is no indication that the perpetrator was on the Metro. So there's Metro Transit Police in the area, and obviously being on 17th Street by the White House, Uniformed Division of Secret Service were in the immediate area as well.
What kind of weapon the alleged perpetrator used?
We do not know at this time. It's still under investigation.
We're going to be able to take a couple more.
Has been able to question the suspect, or is his condition so severe that you haven't been able to have a conversation?
Sure. Again, so as I said, we're very preliminary in the investigation, so we're looking to all aspects of who the individual is, his connections. At this time, he's still in the hospital receiving treatment.
And I would just like, hang on, I would just like to add, the reason that this suspect is in custody is because of the bravery of the men and women of the National Guard who responded due to their extensive training to secure American lives today. There was not any further injury and any further shootings. We should highlight the fact that the men and women of law enforcement, the interagency, the Department of War, and the National Guard executed their training with great precision today and prevented an even greater tragedy from befalling us. These National Guardsmen are heroes, and we must pray for their safety and their speedy recovery. And as the chief said, we are in the preliminary stages of this investigation. We will run down every single lead, every piece of evidence. This is the power of the U.S. government at its best at the state, local, and federal level. That is why this interagency group is standing behind us to assure America and the world that we will continue to keep D.C. safe. And thankfully, we have Metropolitan Police Department, the National Guardsmen, and federal agents, and the Department of Justice and the Attorney General willing to prosecute the mission to keep Americans safe. And President Trump has rightly stated that this heinous act will be investigated, and he has thanked the National Guardsmen and women and the men and women of law enforcement.
Thank you. Did the suspect say anything at the time? Why did the West Virginia governor say that they were killed? Chief, was anyone else shot besides the two?
Have the families been notified?
General, what about the...
When we just watched a press conference there with officials in Washington, D.C., an update on those two National Guardsmen that were shot earlier today at around 2:15 p.m. Washington time. According to Jeff Carroll, the Executive Assistant Chief of Specialized Operations for the Metropolitan Police Department, that is the local police department that oversees the streets of Washington, D.C., he said a suspect came around the corner at 17th and I Street, raised his arm with a weapon of some sort, and discharged at multiple members of the National Guard. At least two of those members were shot. They were taken to the hospital, and according to Jeff Carroll, as well as to the mayor of Washington, D.C., Muriel Bauer, they are in critical condition in the local hospital at this stage. And Katie Greifeld, he also talked about how, in his words, this does appear to be a lone gunman, and that, at least for right now, there does not appear to be any other suspects. He did say that that suspect was subdued by other members of the National Guard, and he is also, that suspect, I should say, we don't know the person's gender, is now in the hospital as well, being treated for that person's injuries.
And we did hear from the mayor of D.C. that it looks that this was a targeted shooting when it comes to a potential motivation. We don't necessarily have that. But again, the mayor of D.C. saying that this did appear to be targeted. But of course, one of the main headlines coming out of that presser was that the National Guard members are in critical condition, Romaine.
And we should just point, as a clarification, we did report earlier some commentary from the West Virginia governor, but you heard here just a few moments ago from the main police officer overseeing this investigation in Washington, D.C., Kash Patel, the FBI director, and the mayor of Washington, D.C., saying that those two members are in the hospital in critical condition. Balance of Power is coming up next.